Thank you very much, Nadine, and welcome to the panel. As mentioned, I'm Adrian, founder and managing partner of AC Ventures. We're an early stage venture firm managing 300 million in AUM, focused on Indonesian early stage technology investments. In our panel today, we'll be looking at how LPs' investment strategies have changed in the aftermath of the pandemic, as well as what that means for asset allocation as we go into 2022, and also what is driving Asian LPs to continue pursuing opportunities outside of their region and foreign counterparts increasingly looking in. Today on our panel, I'm joined by Miriam, Alessandro, and Yong, and I'll hand over first to Miriam to briefly introduce herself.
Hello to everybody. My name is Miriam Schmitter. I'm based in London and I lead Commonfund's investment activities in Europe and in other parts of the world that are not the US. I'm a managing director at the firm. Commonfund is an asset manager that offers comprehensive private capital solutions across the spectrum. And I'm also part of our global investment committee. So I see all the investments that we approve, which I guess is helpful for the discussion today.
Thank you very much, Miriam. And Alessandro, please.
Hello, I'm Alessandro Silvestro. I'm the managing director of Lemanik based in Hong Kong for Asia Pacific. Lemanik roots are in Switzerland and in Luxembourg. Lemanik has three main businesses, which are wealth management, asset management, and as well the AIFM. Roughly, the group manage between liquid and illiquid strategies, 35 billion, and 7 of those are in Asia. I've been based in Hong Kong and in Asia for the last 10 years. Thank you.
Thank you very much, Alessandro. And lastly, Yong, please, could you introduce yourself?
Hi, this is Yong from Proskauer. We are an international law firm headquartered in New York. I'm based in Beijing, so I'm generally working with international fund managers, mostly based in Asia, but also other international institutional fund managers based in other parts of the world. As I mentioned, I'm based in Beijing, but during the COVID, I'm actually right now speaking to you from New York.
A very good early morning to you then, Yong. Thanks so much for getting up early.
No problem.
Right, so to start off, we're going to take a bit of a macro view and look at how the technology landscape has changed as a result of COVID. What I think we've seen everywhere is that COVID has accelerated technology adoption across all markets. Latest data that we see from Crunchbase is that already 250 new companies have joined the unicorn club, reaching $1 billion+ valuations. So from our panelists, as LPs and advisors of funds, how have you seen investors' sentiment and appetite going into this year with the enduring impact of COVID? And tell us, how do you think this will evolve going forward into 2022 as well? Perhaps I could invite Miriam to get us started on this one.
Yes, absolutely. So I think we've seen continued very strong investor appetite for private assets. And a lot of that is driven by the record wave of distributions we've been seeing over the last year or two. A lot of that appetite has been for growth assets, as you've pointed out, Adrian, and also geared towards sectors that have been shielded or even been benefiting from the crisis, right? And the shifts in societies that this has accelerated. I think what all of us are very mindful about, and to a certain extent also struggling with, is how you price these highly sought after assets, right? Because as we all know, we're in a period of very high valuations. Other trends I'd like to point out is ESG and sustainability. I think that's continuing to play a more and more important role when investors make investment decisions. And, say European investors are probably at the forefront of that. we've obviously seen lots of shifts in China. That has been a region that has produced extraordinary returns, but the government has decided to affect some changes in regulation over the last 6 to 9 months, and investors are trying to basically figure out what does that mean for the future and the sectors they want to invest in. I'd say that that's it in a nutshell, Adrian.
Thank you so much, Miriam. And Yong, perhaps there may be something you would like to add on this. In particular, if we've seen this increased interest in this asset class as a result of distributions, have we actually seen a change in proportion, perhaps, in how LPs are allocating across the different asset classes?
I totally agree. There's like an increased appetite from LPs on investments in private assets. For us, since we are legal advisors, we were kind of one step removed from the market. So what I observe from regarding the market is from the activities of my clients. And based on that, I actually see strong demand or more activity from my clients in terms of their investments in funds or investments in just various secondary transactions or co-investments. And that in a way kind of surprised me a bit, because initially I thought the COVID and the other political developments might dampen investor appetite or interest a bit. But I think probably like from my perspective, after the pandemic has been here for a while, people have already priced that in. So the impact of the pandemic on the investment activity has decreased. At least that's my perspective. And also with the like a recovery from pandemic in Asia, China, and in other parts of the world gradually, the investment activity has really come back. And both, like, there are different industries. One is the healthcare, and that's definitely one of the industries that has not been hit by the pandemic. But there are also like consumption. That's also one of the sectors I have seen my clients participate in a lot of like investments since the beginning of this year.
Thank you so much, Yong. Certainly as a GP, I've seen our firm and also many others have to evolve as the a post-pandemic, how we fundraise, how we engage with LPs. From your view, Alessandro, how have you seen the fund managers evolve more broadly globally in the last 1.5 years, now that travel has lessened and you're seeing a lot of attention in this asset class?
Yeah, I would say two main trends that actually Miriam and Yong already alluded to. I will focus to China and I will focus to ESG. I think, China and at a macro level, Asia, they have been doing extremely well. LP actually increased exposure to Asia Pacific and setting, new dry powder records. China continued to be, the most interesting market by far. They were the best to recover from COVID, the soonest. So China looks to be the big winner here. However, as you might have seen, there is this new common prosperity program, which is very interesting. Everything started actually by a blogger, and it was a blogger tirade. And now, basically, this has been endorsed by the Chinese government. Beijing, basically, in a nutshell, decided to regulate and curb some sector to foster common prosperity. So basically, in a nutshell, technology firms, which are too big, maybe, e-commerce, education, fintech, and even ride-hailing app will be regulated by Beijing with the aim to reduce inequality. The gaming sector actually has been hit also as well, where basically young Chinese children will not be able to play more than 1 hour over the weekend. So it's 3 hours in total, because they have seen that this gaming industry basically generates addiction and perhaps even poor academic performances. So we can see already that the gaming industry has been hit. Now, what is the outcome of this economics, as some are talking about, are mentioning? Billions of dollars have been probably, knocking off the technology sectors. Some investors that have been, investing in China technology for many years now are pausing, like SoftBank, for instance. And for sure, there will be, as I said, a control on the technology sector. Now, the impact can be huge to those guys that have been investing, in private equity in China or in China's technology or education. What are the benefits of this economics? For sure, we will see much more investment in the small, medium enterprise, innovation, startup, and probably a long-term consumption. In Europe, moving to ESG very quickly, ESG now is a must-have, it's a must-adopt. Actually, LP want to see ESG policies, and GP just have to do it. It's not a nice to have, as I said. They need to have this reporting because it's an investor demand, it's a regulatory demand, and it is a best practice.
Thanks so much, Alessandro. Now, going into a little more detail as to where we're actually seeing those returns, I'd love to ask Miriam if she could share, from what she's seen, which fund managers and which region, by region, sector, or stage, have you seen the most success and returns and distributions in the last 1.5 years post-COVID?
Yeah, absolutely. I mean, I'd say it's been globally a period of very strong performance, right? And not only in the private markets, but certainly also in the public markets. We've seen record M&A, record IPO volumes. We've seen the SPAC phenomenon take off, right? So there's been a lot of liquidity distribution and also just general write-ups within portfolios. Venture capital has been particularly strong because many of the companies have been riding the trends we've been speaking about, this acceleration of the whole digitalization of our societies, working from home, homeschooling, lack of travel, et cetera. So that's why we've seen particularly strong returns, but across the board, I'd say really. Areas that might have struggled a bit more, some companies or funds that had heavy exposure to industrials, and that's obviously not uniform across the board. But as we all know, there's been the chip shortage, there's been labor shortages globally in different parts of the value chain. So some industrial businesses have been impacted by that. And then the obvious sectors such as tourism, right, which is still way below the levels it was in 2019, and just generally other businesses that rely on people coming out of the house, attending physically, nightclubs, etc.
Thanks, Karen. Thank you so much, Miriam. So let's move on to some of the regional differences and looking at how LPs have been allocating capital at different markets across the world. I'd like to actually start off with Yong. Alessandro had brought up the common prosperity drive in China. From your interactions, have you seen LPs and managers navigate these new sentiments towards regulations and the risks that might impose?
From my experience, I think some of the new regulations or practices did present additional difficulties or problems for my clients that they had to overcome. Like, for example, one of the issues we have been grappling with not long ago, I think at the beginning of the year, was the disclosure of ownership for the company that seeks to go IPO in China or Hong Kong. Because a lot of my clients, they actually they didn't invest in the company, but instead they invested into other funds that in turn invested in the company that seeks to go IPO in the A-share. So suddenly my clients, as like fund of funds or other institutions, suddenly found themselves that they had to face the ownership disclosure issues presented by the company that seeks to go public, because the company will go to the first layer of their shareholders. That's the other funds, and the other funds then goes to my clients. So suddenly we had to like face the issue that we need to disclose all our owners, underlying owners in our funds, and some of the information required by the disclosure request simply we just do not have. So there has been, like for those kind of issues, there has been certain back and forth discussion with like all the parties that are involved in the IPO process. And since the regulation or requirement is new and what has been evolving, so eventually I think some of the clients simply had to stop the process, or we'll just provide whatever we have. We can't do what we cannot. So that's one of the areas, or one example, that by investing in China, sometimes we have to face additional or very rapid regulatory change. And that has been one of the trends in China this year. Probably we just see a number of regulatory changes or adjustments all at the same time. But I think we will probably need to look at like the different categories or categorize the different changes, since some of those, if you examine it carefully or closely, they are actually not new, or at least it's kind of the kind of market change or regulatory environment that other developed markets have already undergo in the past. China is just picking up in the process of development.
That's right. And I think we've seen in other markets too, you know, from Korea and even the kind of recent court ruling in the US on Apple, that governments are looking to curtail some of the power in the large technology companies. Alessandro, have you seen, is this a concern at all in markets outside of China on regulatory risk for any of your asset classes?
I mean, obviously, we need to monitor that. This is part, of our due diligence. Sometimes when there are, other factor intervening in the valuation, basically what's come about is all about risk diversification. So trying to, not focus too much into one sole company, but try to have a diversified portfolio to basically to be on the safe side.
Right, certainly. So kind of going onto that theme of diversification and looking across kind of your different asset classes, historically, where have you seen in the last, say 3 to 5 years, the most consistent and strongest growth in which markets, in which asset classes? Alessandro.
I would say in the past 5 years, VC capital has been the highest performing asset class. So probably I will make you happy, Adrian, because we have increased, and this has been increased by the pandemic. Actually, in 2020, the venture funds had amazing performance. Now, can they keep it that? Probably not, but I think the outlook is still very, very positive. And still, there are a lot of area, especially in Asia Pacific, where typically the banking side and the retail side can be easily disrupted.
Thank you so much. And I'd like to pose the same question to Miriam to see if you have anything to add there.
Yeah, no, I'd absolutely agree. Venture, that is certainly a market that has boomed. And Asia, led by China, that has been the growth market over the last 10 to 15 years. And you see that in shifting portfolio construction. I mean, if you looked at our venture portfolio 15 years ago, it was probably 80 or 90% US. These days, it's 50% US, 50% other parts of the world. And we were probably an early diversifier, right? I'd actually say that Europe has been accelerating over the last 5 years, also in venture. And that is really part of a maturing ecosystem, that suddenly you've got these much larger companies, you've got repeat entrepreneurs, you've got successful former entrepreneurs who are now angel investors. So I'd keep my eyes on Europe as kind of the next market to become at one point maybe equal to Asia and the US.
Thanks. So just going more into this theme, you've both indicated that venture has been a strong performing asset class. I think looking at the various GPs operating in VC, we've also seen that fund sizes have increased almost exponentially as well. And with those larger fund sizes, higher valuations, maybe that's also another thing we've seen with the founders and entrepreneurs companies too. So with this increase, how are you viewing this as a factor to impact returns in the future? Do you think it will be a drag? Will it actually help accelerate the progress of some of these companies, or lower risk because of the abundance of capital? What are your thoughts on that? And Alessandro, it'd be great to hear your reactions.
So absolutely, as you have said, there is a focus on the big managers, especially I would say the big managers and the small elite of very large managers has been the big winners of this pandemic. If we look at the TPG will go IPO, other big managers have tripled their value size. Actually, if you look at Goldman Sachs, the top 10 basically revenue client are coming, all 9 out of 10 are basically private equity and venture capitalists. So what I'm just emphasizing what you said, bigger funds getting the most of the pandemic. Now, it is also true that I think with the opening up and slowly we are going to be able to live with the pandemic. LP will try to go to more emerging managers, more niche managers, and specialist managers. So I think that for smaller venture capital, the best is yet to come.
That's a very interesting comment into emerging managers and maybe even emerging markets. And maybe I can bounce once more back to Miriam and ask if that's something you're looking at, what sort of specializations might you be looking at for emerging managers or emerging pockets of value or future value, I'd say.
Yeah, and I think you probably have to look at venture and more traditional private equity / buyout separately here, right? Venture capital has always been a business where a limited group of people has been very, very successful, and success has kind of begotten success, right? So almost like a bit of an oligopolistic business. The fund size explosion we've seen on the venture side has been, I'd say, in growth vehicles mainly. Many of them attached to firms that have kind of built out across the whole stack. And I think those are potentially more sensitive to swings in valuation because you're going in later, you're coming in at reasonably high valuations at the moment. On the private equity side, things are much more fluid, right? We often see people be successful with 1 or 2 funds, and then they drop the ball, right? So there, I think we're constantly on the lookout for kind of hungry emerging teams. I think also on the private equity side, fund size potentially can again be more detrimental to performance, even though there's some people that have been incredibly successful with very large funds, right? So yes, it's definitely something that we're open to.
Thanks so much, Miriam. Now let's move and look towards 2022 and the years ahead where we're seeking returns. I think 21 actually saw quite a record number of funds come together, raising the next fund or growth funds or growth vehicles. I'd like to ask you, Yongren, first. Are you expecting to see this from a fund formation standpoint trend to continue into next year?
I think you need to look at the different managers. To us, like this year, the funds we worked on or the fund we invested into as LPs have all increased significantly in terms of their size. And of course, if those funds come to our attention, it's like, especially this year, it's always sponsored by fund managers that has a successful track record, has a good reputation. So that to me shows that the pandemic actually helped those fund managers that have already established themselves, thanks to a certain extent, at least at the beginning, when the pandemic hit, there's travel restrictions and no more like in-person meetings. So it's very difficult for the LPs to develop additional relationship with new managers. So instead, a lot of the LPs inevitably will increase their re-ups. And that's true for my clients as well, because I will say a larger percentage of the deals we worked on actually reflect re-ups of our clients in existing GP manager relationships, because that's easier to do. Otherwise, you have to develop a new relationship. And that has been fairly difficult when the LPs cannot meet the managers. And virtual calls has been quite effective or efficient to conduct, but sometimes to establish a new relationship, some LP or investors actually have the requirement that they probably need to have one or two in-person meeting before they can finalize this kind of relationship.
Thank you for sharing that perspective. Now, as we look into the future and try and ascertain what are the areas that we're going to see the most growth from, what are the segments or regions, Alessandro, that you feel that that that's going to represent strong growth? If you could start off with that, thanks.
Sure, thank you. So do I see a big change, a fundamental change compared to the past 5 years? Not really. I think the investor appetite will continue to be very strong to private equity. LP have the largest amount of capital in the next 12 months. They will spend the larger amount of capital in the next 12 months. So the investor appetite is still there, and especially for the emerging markets. Now, and who will be the big winner? China, Southern Asia, I think as well, they have a bright side. We talked about ESG before, the clean energy, green energy, all this sector, I think will do very, very well. I'm also bullish on the debt financing side. I think that's an area where, I see there is a big area of growth. Healthcare, obviously, we cannot be forgotten. And obviously, it's technology. There is still, a lot to do on technology side. Now, as we said earlier, careful with technology because and private education because of the Chinese government and the focus on these two sectors. And as well, another sector where we'll be very careful, although it's always interesting, is the luxury. So as you know, luxury is fueled by China. And the main growth of luxury actually is and the main engine is China. Now, if the Chinese government decided to push, on this lower profile and stop inequality, obviously luxury will be hit in a way, and I expect to see a lower profile from the luxury industry.
Thank you. Just a quick mention, if any of our audience have any questions, feel free to let the team know, and they'll post them into our chat here, and we'll leave a few minutes for questions. So please send them over to your to the Super Returns team if you do have any questions, and we'll try and get through some of those towards the end. So thanks again for sharing your thoughts, Alessandro. And one of the things that we've seen as well with fund vintages is vintages of funds which have come at the bottom of a cycle have performed particularly well, and we may consider that being a 2019, 2020. But this market has bounced back faster than any historical perspective. Based on the data and what you've seen in the past, Miriam, do you think you could give any indication of what a 2022 vintage might look like, given asset prices are just far beyond what we've ever seen in the past?
Yeah, I wish I could tell you that. I think one of the lessons that all of us have learned who've been in private assets, just given the duration, I mean, especially if you invest in funds that are then invested over 5 years, right? And then you might have another 5 years when they're being realized. You just have to be consistently in the market because it's impossible to time the markets. I think for 2022, there's a number of variables that can really change the outlook, right? One would be increased assertiveness by federal banks in terms of increasing interest rates, right? That's a big swing factor. It could be kind of the pandemic kind of coming back with a new variant that shuts down everything, might be vaccine resistant. Or any other event that might just be a trigger, right, to kind of take some of that froth out of the valuations. Or we could kind of just continue on that trajectory that we've been on, right? If that's the case, which I think most of us probably at the moment think is the most likely scenario, I mean, we're certainly not at the bottom of a cycle, right? So I don't know if 2022 might be one of the best vintages. But probably more middle of the pack, I'd say.
I see. Thank you. Thanks for sharing that perspective. I think moving on as well and looking at we mentioned some of the regulatory risks that had appeared earlier in the panel conversation. Yong, could you maybe shed some light on what are some of the future risks or risk proofing considerations that managers are looking at, or LPs are looking at, that can help mitigate for things like regulatory risk or other risks that may come about?
I think at least with the China market, I actually expect to see there will be more more regulations in the market. I think that's natural because with the market becoming more mature, you will see there are like new regulations coming out, and I guess one difference between the government in China and other like more developed countries is that I think to a certain extent, the Chinese government actually acted more rapidly in terms of whether reacting to certain like new situations in the country, or in terms of because the market is still evolving fairly rapidly in the country. So the regulation will have to evolve in accordance or in response to the economic or the market conditions there. So naturally, we will see new changes, new regulations coming out to like deal with the market conditions. That's one type of regulation that I think we'll see more of those kind of regulations, and that's a natural phenomenon, I think. But at the same time, we have to admit that there are certain bilateral relationship issues between China and the US, and there may be certain responses from the country that's actually is a result of that bilateral relationship. And for that, that's a political risk that the investors will have to take into account and I guess adjust their investment accordingly.
Okay. So acknowledging that risk that Yongren had just brought up, Alessandro, are you seeing any material impact to forward-looking allocations, geographic by region or asset class?
Look, the short answer will be, Asia, China, and Europe. That's where we are going to allocate the money. Now, again, China, we are very, very bullish on China, but China changed rapidly. We talked about before the Common Prosperity Program. Now, what before was the mantra for Jack Ma, the 996, which means from 9 a.m. to 9 p.m., 6 times a day, that was his mantra. This has become illegal now in China. There will be more internet limit to internet firm and profitability. So we need to be careful and cautious about that. Now, China offers multiple opportunities. I think on the agricultural modernization, there is a lot of opportunities. I think there are also a lot of opportunities in the rural revitalization. ESG in China will be huge. That's just a question of time. And as we mentioned before, loans are extremely interesting. Moving to Europe, healthcare, obviously no surprise there. TMT, which has been very resilient during the crisis. And as I'm from Italy, I hope the small medium enterprise in Southern Europe will finally be a big bet and a big opportunity for private equity.
Thank you. And I'd like to hand the same question to Miriam to share her thoughts.
Yes, so I think for us, it's always more tweaks, right, rather than a wholesale shift in or out of a region. And that will continue to be the case. I think we've been very early in tech, both on the venture and buyout side. I think on the buyout side, there's been a wave of newcomers in many markets. So we're keeping a close eye, as we've said before, on valuations there. But also speaking more broadly, I think we will continue to focus very much on GPs that have proven to be very adaptable to changing circumstances. I think we might keep an eye out for people that have more of a value bias, which hasn't done too well over the last 5 to 10 years, but the time might come now. And then also spin-offs are a big theme, right? I think that's one of the pluses of being in a buoyant market, that people have built strong track records and they have the courage to kind of venture out on their own. So that's also been a big theme.
Thank you so much, Miriam. We've actually just gotten a question from the audience, and it actually plays on one of the questions that we just asked, but it asks, whether the moment has arrived for Asia to garner superior allocation in line with growth potential. So, rather than country specific, I think that points to whether we may be seeing a shift towards, I guess, more emerging markets in terms of capital allocation. Either Miriam or Alessandro, if you'd like to take that. Alessandro, perhaps first.
Yeah, sure. I can start and maybe Miriam can add. US is by far the biggest region for investment, but Asia Pacific has been the engine for driving global growth. So alternatives are playing a larger role in asset allocation across the Asia Pacific region. In the last 5 years, Asia Pacific have multiplied by 3x. So that's fantastic results. I think dry powder in Asia is hitting the roof and actually is outgrowing other regions. So I'm very, very positive about the outcome and the future for the Asia Pacific private equity.
Thank you. And Miriam?
Yeah, and I think we've seen that already materialize, right? Shifting capital flows to Asia, many new LPs and investors embracing Asia. I mean, I don't think you can view it as one region, same as, Europe. I think you need to look on a country by country basis, but definitely deserves a strong allocation.
Thank you so much. Well, this is the end of the panel for us. I'd like to thank my panelists, Miriam, Alessandro, and Yongren, and also Super Returns for hosting this. And thanks so much, everyone, for your time.